Oh, ding ding. All right, let's run over the end of day real quick here, and then yeah. All right, let's check this out. So we got a little bit of a squeeze on some of the short calls there at the end of the day. Pushed us up right to the market maker expected move, like 59.71, slightly above it into close. I did kind of expect that we would see some upside today over the weekend. I think I was targeting like 59.60. Hold on, I can't see the line that I drew. Yeah. So right around here. We got durable goods today, which I'm pretty sure it said trading economics. On trading economics it was supposed to be Tuesday, but it came in early. It wasn't bad either way, but I mean the auction was terrible on the 1 year, so yields went up anyway. We got the 10 year roughly at 4.59 right now. Getting pretty close to that 4.6 level. Dollars continuing to rise, holding above 108, mostly against the yen, yuan, and a little bit against the euro and the pound. BTC's continuing to drop, so we're seeing the risk assets sell off still. And Dow and Russell still haven't caught up with the gains on NQ, so there's still no breadth in the market.
Costellosaurus put their pickle in my jar. Merry Christmas, pickles. Thank you, Gek. Enjoy time with your loved ones.
Thank you so
Ho ho
much,
ho CP3.
Costellosaurus. I appreciate it, dude. Yeah, and so going into tomorrow, I would say that this leaves us in a fairly similar position to the like end of day Friday. There's still not a lot of downside support. We technically have a lower high than Friday's intraday high here. So we'll still need to see bulls come in and build up some support around spot. And without breadth coming in and with yields continuing to rise, I think it's still going to be difficult for them to build that upside leverage that they need to get this back up to gamma neutral. Now, gamma neutral is our mean reversion point, but we're still well south of that. And so, gamma delta still negative. We did reject here off of the bull signal on ES again, giving us a double top and a slightly lower high. And so, I mean, if this were to continue in the overnight session and fail 60.26 or 6,000, we would have confirmation that the breakout of this bullish consolidation had failed. So I'd be looking here and here in the overnight session specifically. If those fail, you can expect maybe a retest back here at the bear signal. Or, I don't know, maybe today's like low, like 59.65-ish. But we'll see how that continues to play out. There is some data out of Japan tonight, which could cause some de-risking in the carry. I believe we have the BOJ minutes coming out around 8:50 p.m. and so that'll be in the overnight session. We also have Redbook in the morning, where people will continue to look for signs of positive consumer sentiment at retail locations through the holiday season. So that'll also be pretty important. Richmond Services Index will matter, but I don't think anyone gives a shit about the manufacturing side. And then the two auctions tomorrow are actually kind of important. The 2-year floating rate note, I'm not sure the size on that, but it matters. And the 5-year auction, if tails in the middle of the curve, like the belly, like 2 to 5, continue, like those auctions continue to print tails, that's going to steepen the bear steepener we were already seeing. So keep an eye out for that 5-year note auction. I know it comes fairly close to the end of the day tomorrow, but it could have a bit of an outsized impact. So yields up, dollar up. Commodities really not doing much today. Gold down yet again. Still kind of chopping around that low 2,600 range. Silver up a little bit, and oil moved up slightly, but not in any way a relevant move. Still sub 70 a barrel. Correlation on the 1 month started to break down a little bit again into the end of the day here, and seems to be finding a bottom where dispersion's really not levering up more. We'll probably want to see 3-month correlation decline a bit more to get like a bullish signal from this. and we'll probably see that in advance of the 1 month correlation declining. They do have quite the spread on them right now, but look for 3 month to decline ahead of the 1 month. As we see that volatility shorting out on the like 30, 60, 90 day, but short term vol still fairly high. Leverage on the carry up to 8.87. And seeing a little bit of leverage turn up on the short end as well. This is really close to the all-time highs, and this is the first day that we've had forward yield on volatility drop negative since Wednesday of last week. But it's barely negative, negative 0.29. So this could still reverse the other way, especially if the bear steepener keeps getting worse, and people want that longer term volatility again. So it may be that bond funds that want to go long volatility are just waiting for that mean reversion, and they're gonna go long some longer dated volatility now that it's priced a little better. Move up a little, still under 100, but correlation on the 3 month dropped pretty hard today. Skew down on Friday. I don't know where it's going to be today. I would imagine probably back up again, but there was a little bit of tail risk hedging that occurred Friday, and probably is what helped a little bit of a drop today. However, check this again in like 10 minutes or so, and if skew drops again, that's not a good sign. So if we're continuing to see tail risk hedges getting picked up while the market's going up, that's an indication that bears are repositioning. So give that a look in a little bit when it updates. Some breadth came back on Friday. We didn't have much breadth today. I don't think we're probably gonna get a little move up, but yeah, probably not much. Correlation with between vol VIX and cash VIX, or VX and cash VIX, still picking up. So we're still seeing that move higher, which means that another spike in volatility is probably likely. There's still a lot of pressure there, and they haven't gotten that turned around yet, where they can get some smooth vol shorting and really drive volatility down. Remember, mean reversion on VIX is just 16, right? So I mean, it's still not, even though it's taken a big hit from where it was, it doesn't stay at very high levels for very long. It can still reverse back up to the upside. So watch out for that. Fed fund futures pricing in a bit fewer rate cuts today, and we saw the reaction in yields with that, going back sub one cut into June of this coming year, and that's with the auctions. This one's probably the most interesting. The 10-2 spread is positive 24.9%. I kind of indicated that that's like a big recession, tighter credit, tighter financial conditions indicator, and it's continuing up. That's not really stopping, and that's going to put a lot of pressure on not only margins but risk assets as well, and that they'll have to sell risk assets that are held on margin. So yeah, continue to watch that, especially as it gets above like 30%. It gets really kind of crashy, actually. And for our technicals, I think end of day we pushed right up back into the EMA 30. So tested it Friday, retested it again, tested it and rejected Friday. Hit the low, retested it again today. We'll see if we get another failure off of this. Obviously, this trend line, fairly important. Both of them are, actually. This is like the long-term one. I'm not sure which one this is, but it comes from somewhere. More importantly, though, the EMA 30. If that fails again and we lose the MA 50, that's probably it for this bounce. Like that would probably mark, at least signal the end of the bear rally. And then, yeah, very likely we get a retest at like the 58.30 level. Possibly that breaks down or it forms a double bottom. But if it breaks down, that's going to open up the test out to the longer term trend down here around like 750 or so, 760, 770. And that's that's where we have that monthly confirm is down here at 5696. And this would mark an actual breakdown on the higher time frames, which is something to watch out for. And you do have a bit of a head and shoulders forming here, so keep an eye on that as well. It's not the 1929 trend line because maybe it is, but yeah, it doesn't scale it properly on the daily. The 1929 trend line's drawn out here on the weekly. But it's, yeah, sure. It just doesn't scale it right. It changes the price levels between the time frames. Good call. Anyway, that's it for the day. I'm not going to be here tomorrow, but I will see you guys Thursday morning. I'll try to get out some Pickles picks tonight just to give you an idea of what the levels look like. And happy holidays, guys. Thanks for tuning in, and I will see you guys, yeah, Thursday. And before I go,
Kenny baby just slips and fails under the tree for me. Been a shitty trader, Kenny baby, so hurry to your jail cell tonight. Some 5-10 calls because I am a degen.
That means degenerate.
I just can't simply stop, Kenny baby, so hurry to your jail cell tonight. 5-10 calls all our way. Think of all the cash I've missed. Think of all the morons that I got to enlist. Next year I can say I'll do the same, unless you squeeze my favorite play.
It's GameStop.
Kenny baby, I want a lot, and really it is a lot. Been a degen all year, Kenny baby, so hurry to your jail cell tonight. Kenny honey, some really big things I need. My shares and my fucking money, Kenny baby, so hurry to your jail cell tonight.
That'd be a Christmas miracle.
Kenny cutie, fill my stockings with the respects and checks of your funds investors, Kenny cutie, so hurry to your jail cell tonight. Come and trim your foolish hedge with some freshly printed money from the Fed.
Thanks, Jay Powell.
I really don't believe in you. Let's see how long until you're pegged.
Pegging.
Kenny baby, forgot to mention one little thing. A ring from your favorite lady, Kenny baby. Margin is calling tonight.
At least I sure fucking hope so.
Margin is calling tonight.
Hopefully sometime soon.
Margin is calling tonight.
Or sometime in the very near future.
Hashtag not a cult.